So I live next to the beach, a mile away. Got on my bike on Wednesday night. Thunderstorm came through. Temperature dropped. It got cold. Then look what happened. It just turned. Hey, it's your favorite mortgage guy, Steve here. You know what? It is Friday and it is hot, hot, hot. We got a lot of stuff to talk about today, so let me just jump right in. Now, listen, I'm going to be bouncing around because I got a lot of notes here. So I'm going to start with your questions. The closing costs. Steve, you talked last week about the percentage of closing costs to the sales price. Can you explain? Okay, so real quick, typical closing costs in Virginia run between 2.7, 2.9%. That's on the bigger loan amounts, loan amounts above like 450 on up. So if you think about this for a second, let's just say you've got a loan amount of $100,000. And let's say you have let's say you have a $700 appraisal fee. Doesn't matter the loan amount. The appraisal fee is going to be the same. That's 0.75%, right? So if it's 2.9, keep in mind the lower loan amounts, the percentage of the cost might be higher. Hopefully that explains it. But typically, if you just have to kind of figure out on loan amounts above 450, I would say about 2.9%. Okay, Steve, you've been talking for a while about reverse mortgages. My mother died. What do I do with the mortgage attached to the property? Okay, great question. I'm sorry to hear about your mother. Sorry for the loss there. So here's the thing. With the reverse mortgage, you have a couple of options. One, you can just flat out sell the home, pay the mortgage off. You guys walk away with any profits, if there's any, and you're fine. Number two, you owe more than the house is worth. You give the loan back to the lender. You just turn the property over to the lender. They do a foreclosure. It's just verbiage. And then they sell the property and they take the loss. They don't come after you or your family. Number three, you pay off the mortgage, you keep the property. You refinance the mortgage. My mother died in February of last year. So when she died, she had a reverse mortgage on the house. So I've just financed it, paid it off, and then kept the property as a rental property. So you've got plenty of options there. Okay. Last question revolves credit. And here it's a long question, but it's more along the lines of how do you do credit repair, keep your score up? Here's what I'm going to tell you. Excuse me. You need to have a conversation with me on that privately. I have a credit repair company, but I'm going to be honest and tell you guys this. I'm not playing. I'm not here to fix your credit. I didn't mess it up. You messed it up. I'm here to help you unflush that toilet, but you have to invest in yourself. It's about $50 a month, maybe a little bit more, depends on how bad your credit is. If you want to buy a house and you want to get your credit repaired, spend the money. Don't do anything for free that's on the internet because you're going to get screwed. Even worse, don't go to an attorney who's going to tell you don't pay your bills because it's going to make it worse than it is now. A real credit repair company will guide you. Okay, so guys, listen, we've had a big week this week. It looks like we might be finally working towards a resolution or some sort of an agreement on the Iran conflict. We'll have to wait and see. We've heard this before. We've been down this road. We'll have to wait and see. SpaceX, they also made history with their IPO being released this morning. So this will be the biggest in the history of the U.S. financial markets. Guess what? The World Cup has finally kicked off. We had the NBA this week. We got the Stanley Cup. Now you've got the World Cup kicking off, and nobody knows what to watch it on. What venue do you watch these things on? Hell, it's probably just cheaper just going to a bar and watching it. But there's something in Congress right now that they're arguing about with why don't these people find out until a couple of days before? Here's why. It's about money. Okay. So why does any of this matter about housing and mortgage rates? Excuse me. I don't have any water with me. First, the World Cup. It runs from June 11th through the 19th. It's only 39 days. The projection shows it could create about 185,000 temporary jobs across the nation. 185,000. That sounds great, right? But here is the question. What happens when those jobs go away when the tournament ends? Those numbers will still show up in the BLS labor reports. But we need the real story. Remember me telling you, read the story, not the headline? A lot of these people have asked, what happens with this? Well, what's going to happen is these are temporary jobs, but because they're more than 30 days, they're going to show up in the BLS. So it's going to make things look a little more skewed, and hopefully they'll pick up on that. So a lot of people have asked about the Iran conflict and the impact on interest rates. The simple answer is uncertainty moves markets. Energy, oil, global trade, and the Strait of Hormuz. That all matters, right? But will a Fed rate hike open the strait? I doubt it. Will it fix global inflation by itself? I doubt that too. Now, the Fed's job is to balance and control inflation while supporting a healthy job market. Higher rates, that doesn't support those markets. But higher rates usually will hit credit cards and HELOCs and variable debt first, meaning adjustable rate mortgages. So if you're carrying credit card balances, be prepared. If you're leaning on a HELOC to pay your bills, pay attention. That's going to be impacted as well. Now, let's put inflation in real numbers. Now, take a look at this chart right here that Katie's going to put up. Let's look at what inflation looks like, just for those of you who don't understand the word other than the word inflation. So if something costs $1,000 today and inflation runs at about 3%, in 5 years, that same item could cost $1,159. Now, in a country that's dealing with 50% inflation like Iran, the same $1,000 item is going to cost in 5 years $7,594. So look at hyperinflation. That's where things just are going out of control. Nobody control it, like Venezuela. They've experienced this right now. And then this number gets absolutely ridiculous. I know you're looking at the chart, but the same product, $1,000 at a 582% inflation, is going to cost $9 million for the same $1,000 product. That's why inflation matters. It quietly eats away at buying power. Now, for housing, despite all the noise, the housing market, it remains resilient. I've been telling you this for months and months and months. Buy the house, not the rate. I think last week I might have told you this story. If I didn't, I'll tell you now. Had a client. She kept on hearing this in her head. She was in Macy's the other day. She bought a garment and she kept on, she was like, as she walked out to her car, she said, I don't even need this garment. This is the story she's telling me. I don't even know why I bought it. She got all the way to her car, sat down, thought about what I said about buy the house, not the rate. She took the garment back, called me and said, I think I'm going to put an offer on this house. And let me tell you why. And she told me that story. Guys, you're going to go to the store and buy crap that you don't need, but you're going to complain that rates might be too high, yet houses are going up in value. If you wait and the rates drop and those houses continue to rise, the payment's going to be the same as if it were at the higher rate. So existing home sales, they rose to 3.2% in May to an annual pace of about 4.17 million homes, the strongest level since December. Also, there's an inventory out there. Depending on the markets, it's starting to grow. So some of these markets have softened up slightly. Here's the bottom line. Markets move on surprises. They don't move on headlines. Rates, they're going to continue to bounce around. There's nothing you can do about it, nothing I can do about it. But people still buy houses in every market. The key, what do I keep telling you? Have a plan. Have a plan. Buy the house, not the rate. Do me a favor. Call me before the headlines scare you out of an opportunity. Guys, you know I'm your favorite mortgage guy. I need your referrals. Have your friends, your family, your coworker, anybody call me. I'm happy to help them. I hope you guys have a phenomenal weekend. It's hot, hot, hot out there. This weekend is supposed to be a scorcher. Bye now.